tax business owners, landlords, even attacking your savings with a bit more increase in the tax rate. I think that, yeah, they're just basically saying any excess that's hiding anywhere, we want a piece of that pie.
It does feel like the small business owners, the landlord who has the one or two property, it's almost like, don't bother doing that. Just be an employee.
The UK is trying to avoid that. They don't want people sleeping on the streets and barely getting by while somebody else has so much money going out of it. So this is why they try to like close the sandwich, right? And it's like trying to reach people here so that you can lift these people up. You're trying to climb up to be like some of these higher earners and just have a bit more and have that extra disposable income, extra holidays, and, you know, make yourself feel good. They're like, no, we don't want you to be reaching up there. So that's why they bring in these policies to continue bringing the sandwich closer.
From your perspective, looking at this budget, does it concern you?
I am concerned because there's multiple little things that will have a bigger effect. I definitely think that all of these things combined make the UK more and more of a less attractive place to make money, to try and grow your money.
For those people, how should they think about this? How should they try to navigate those changes? Welcome back to another episode of the podcast. I'm your host, Atto. We have a special guest in the building, Benedicta. We have you here for the fourth time on the podcast. How are you doing today?
I'm okay, patching through. End of the year. Ready
Last
to
few
rest.
weeks, right? Last few weeks, yeah. I mean, look, we've got like what, 2-3 weeks before the end of the year, and then we can all rest. I think this has been a hard year.
I think so for everyone, you know, like if you think about all the different changes, like financially, obviously, which we're going to get into, but even like just like immigration type things, policies, like I just feel like this year's been a lot for everyone.
Yeah.
I think so. Yeah.
There's been a lot going on, and you know, I'm hoping in 2026 we can be a bit more positive, but let's see. So you've been with us through multiple budgets now, and obviously, as I mentioned, you know, we've done 4 episodes together. You're still the most watched episode, actually, so people go and watch that one. But for the new listeners, what's the lens you approach tax and money through in your day-to-day work?
So Benedicta, qualified accountant. I call myself your favourite accountant because I think accountants have a general negative bad rep whereby it's like, oh, nobody wants to talk to them, they're boring. Even I don't want to talk to fellow accountants, but I call myself your favourite accountant because I try to make it real. I try to simplify it, no jargon or anything, explain some of these complex things, and also try to advise like what you can do as an individual. If this is the law, what can you do to make it work for you? So that's the approach I come at it from, being relatable, easy to understand, and just making the best of, as they say, when life gives you lemons, make lemonade, right? So making the best of what we have available by understanding the systems, and then we can make moves, the right moves.
Yeah, and hopefully that's what we do today, because, you know, I think what I like to do on the podcast is that, of course, we'll analyze and look at what the changes are, but at the end of the day, it's about the actions. What can we do in the environment that we're in? We can't enforce or change the laws, right? But how do we operate within it? And I'm hoping with this conversation today, we're able to like help people navigate these, you know, changes, especially as well. So before we get into the details, what do you think the government is signaling with this budget, especially the choice to leave earned income alone, but hike taxes on like dividends and savings?
So as much as we say they've left earned income alone, I know we're going to talk about that later. We'll talk about the stealth tax and what they have done. So they've left it alone, but they haven't left it alone. I definitely have always said that, you know, the UK economy or the UK government, they want to keep everyone roughly the same, right? They don't want people to have too much or too little, right? Which is why we have a large welfare state. And so, we're trying to tax business owners, landlords, even attacking your savings with a bit more with increasing the tax rate. I think that, they're just basically saying any excess that's hiding anywhere, we want a piece of that pie, basically. Like, you can't hide anything from us. We want a piece of it. We need it. To be fair, I think they're also saying we need it. I think they're signaling we've known that we needed it, but post-COVID, all the stuff that we did in COVID, the free money, the free this and whatever, the government has always been in a tight situation, but I think even more so than ever in terms of i.e. They need more money to cover up for debts, to make up for the cost of things. So for example, even talking about the welfare state, how they're planning to give out more benefits, which we're going to get into. It has to be paid for somewhere, trying to get children out of poverty, extra wraparound care, like they're talking about, after school clubs and all of that for children. Someone has to pay for it. And they're basically saying we need to all muck in, right? And if you've got some money hiding behind your sofa, under your bed, you need to bring it out. This is time that we need to bring this money together and use it. I think that's what they're trying to say. Yeah.
And what do you think is the hidden consequence of this budget that, people may not see straight away, but might show over time?
The number one thing is that with not increasing the tax thresholds. So it looks on paper to be good. Like, oh, thank God, tax, they didn't say tax is no longer 20% at basic, it's now 22 or 24 or 25. But even not explicitly increasing it, just by so there's two aspects when it comes to income tax, right? You have the actual tax rate, which is the 20%, the 40%, the 45%, right? But you also have the bands, the thresholds. So you have the tax-free 12,570. You have the fact that you can earn up to 50,270, and then that's taxed at 20%. Now, if that 20%, for example, was allowed or covered a bigger band, right, where you had, okay, apart from your 12,570, which is tax-free, which by the way I think should be higher, but let's just say we kept it at that, actually you can earn up to 60k or you can earn up to 70k, and we will still tax you 20%. That goes a long way. It goes a long way because at the end of the day, the cost of goods is always increasing, right? Most economies have inflation. Obviously, even in the healthiest of economies, you do want to have a little bit of inflation, right? Because it signals growth and it signals it's just a good thing. Generally, you don't want hyperinflation, but you want basic inflation. Now, if basic inflation, which normally should be around 2-3%, is going to happen every single year, you need those thresholds to also increase in line with 2-3%. Yeah. It's either you're going to increase the banding, right? So you're going to say, okay, 20%, but you can earn up to 55k, 60k, 70k, whatever, or you're going to explicitly reduce the tax percentage, which obviously they're never going to do that, right? So the other way to combat it, to make allowances, is to increase that threshold. Because at the end of the day, what I could use 12,570 to buy 5 years ago, I can't use that same amount of money. It's costing me more, right? But meanwhile, my tax I'm paying more tax because even when my employer tries to increase my salary, so most employers have policies whereby every year they'll increase your salary by inflation, at least if you work for a good company anyway. Mm-hmm. So let's say your salary was 60k. They increase your salary back to a random number, 62,000 because of inflation, but that amount is still being taxed. Does that make sense? At a higher rate. So they've increased it because cost of goods are increasing, but the tax is still, they're giving you the extra because they're like, we recognize that to pay your gas bill, to pay your electricity bill, you need a little bit more money, but then I'm being taxed. So you're giving me more money, but you're still taxing it. Do you get what I mean? Yeah. So I feel like the long-term effects is that you will see that your money is not going as far. And so even when your employer is increasing your salary, oh yeah, I've got a 5k bonus. Oh yeah, I've got a 5k pay rise, 10k pay rise. You're going to find that whereas mentally you're thinking, oh yeah, I should be feeling better. I should feel like there's a bit more disposable income. What's going to happen is that disposable income is going to be eaten into by the tax because the thresholds are not moving.
Yeah. And I think if we're being honest, I think people are feeling that effect and have been feeling that effect for
many years.
Right? And which is why we're seeing people leaving because, it's like you say, it's this silent tax. People are like, what's going on?
Something's happening. The numbers are changing on my payslip.
Why is thing?
But I don't feel better. I don't feel better. Like I've got more money. And then especially like for families as well. Like it's one thing to be an individual. It's one thing to be like a couple. It's one thing to have like, okay, maybe one child, but children?
Yeah.
It's expensive.
Exactly. And that cost of looking after children, if I don't have a child, but like, let's say nursery stuff, that goes up.
Exactly. Right, so every year nursery fees are going up, but then you're still being taxed on your same salary at the same level. Yeah. There's no leeway, basically.
Yeah. So it's interesting because I'm like, okay, we feel it. How is the government not understanding it, and why are they freezing it and they've freezed it for longer?
I don't think it's that they're not feeling it. I think that they don't know what else to do and they don't feel like they have any other options. I think that they know that if they explicitly came out, I think what they would really want to do is actually be like, we're going to tax you guys 25%, for example, or 30%, whatever. But they know that if they were to do something like that, they would get pulled up. Like people probably be rioting on the streets. So okay. I think what they're doing is kind of doing it in this silent way whereby, okay, we won't explicitly increase your tax, but do you know what? Those thresholds are going to stay the same. We're not moving them. You're going to continue paying more. You're going to continue paying the same amount of tax in terms of the thresholds. So it's just another way of getting more money.
Yeah.
But without explicitly doing it.
Yeah.
So they're silently doing it.
Yeah. And because even like when you said the what's it called? The 12,570. What's that called again? I forgot.
Tax-free allowance.
Tax-free allowance. They haven't increased that in
I'm sure it's like 10 years probably.
It's been the same amount. I remember at one point there was a time when that was going off. I was like,
it was. Do you know what? I think I can't remember the exact number of years, but I think I was doing some research, another podcast probably. But I know that it was. If you remember, the tax code used to be 11,500. So that 12,570 used to be 11,500.
Yeah,
and that was for a good number of years, and then it went up to 12,570. I thought that we were gonna keep on going.
It's supposed to be.
Clearly not.
Supposed to be not. So is there anything people can actually do to reduce the impact of, the frozen thresholds? So, and
this, what I'm about to say is not really just about the frozen thresholds. It's a life hack. It is for your finances generally, whatever country, whatever economy. The truth is you have to have more sources of income, right? And you have to have other places that you can pay for things from. Because if you are literally just living on that one salary, which is being taxed left, right and center, which is being eaten into by inflation, you are going to feel it. But if you have other sources of income that are outside of PAYE, it means that then you can still afford to pay for things that you need to pay for, but with less consequences or less restraint, right? So what do I mean? If you've got extra sources of income, you have a business, you have a side hustle or whatever, and that money is going in to a limited company. I've talked about this multiple times. It means that you can do things like pay for certain expenses. I'll give myself as an example, and I've probably said this on this show before, right? I have my limited company. If I have to buy anything that literally remotely looks like, smells like a piece of office furniture, laptop, keyboard, table, desk, chair, all of that kind of stuff. If I need to buy, I don't know, a sofa in my, in my office at home, I'm putting that on my business. So I am getting the benefits, or I'm being able to pay for things that I need, but I'm not having to pay for that from my salary.
Yeah.
Whereas somebody else who only has a salary is having to pay for that from their 9-to-5 income.
Yeah.
Coming here, I had to get on the train, right? I don't pay for my transport to come for podcast events from my salary or from, do you know what I mean? I put it as a business expense. And by even putting it as a business expense, I'm reducing how much corporation tax I have to pay.
Yeah.
And by the way, even when I do pay corporation tax, I'm paying it at 19%. Compared to somebody else who's a high earner paying at 40%.
Yeah.
So I think that you need to find ways to make money and put the money inside wrappers like the limited company structure, which allows you to preserve it or almost keep it away from the standard PAYE tax bands and thresholds that the government uses and employs.
Yeah. And I think with, many people that might be listening to this, they're like, I think the business that you need, it doesn't need to be huge. It doesn't need to be a huge business. That's the other thing. It could be a growing business. It could be something that, I don't know. You're selling baking cakes. That sounds so cliche, but it's true.
Yeah,
people make money off that, right?
Literally. I know that when you say business, like you say, some people think, oh, I need to come up with some new AI technology or something. No, you can literally anything extra that you are doing that can come into you, but not right. Because basically, what I'm just basically trying to say is that don't just look at chasing the next pay rise. Don't just look at, I need to get another, because I feel like by default, when people feel restrained financially, they think I need another job that's going to pay me more. What we're trying to say is that even if you get another job that's going to pay you more, the tax thresholds, the tax percentages and whatever, you're still going to probably feel tight.
Yeah.
So what I say is don't just think about pushing for the next promotion, the next job. Actually, think about how you can open up a business or get income, sell your skills in a way. Maybe you want to consult. Maybe you are already professional and you just want to take that service and give it to a different audience where they can pay you, but not pay you via your salary, pay you into your limited company that you can then use to live life, basically.
Yeah, exactly. And I think it's important for people to consider. I know it's, people might be thinking, but so I went to America recently, and a lot of people there just do many different things. It's just a normality for them, right? Yeah. So, okay, I've got my job, but I've got one or two side hustles. For me, I don't feel I could do more than one other business. I couldn't do like 2, 3. But, I think that we have to kind of consider that may be the case for a few years, unfortunately,
I think, like I say, for me, I think it's a life hack. I think that everyone should have a business. And like you say, maybe not multiple things, but I'll give myself as an example. So with Beniratio, obviously the main thing that we really do is accounting, right? Tax returns, company accounts, all of that kind of stuff. But don't forget, I also get invited to speaking engagements. I get paid when I go to speaking engagements. I have courses. Yeah. So within the same one business, I'm actually doing multiple things, if you get what I mean. So I don't have to open a new speaking company and then open a course company and then open an accounting company. I have the one thing, which is Beniratio Finances, but in there, I've got the tax returns. In there, I've got consultations. Do you know, since the podcast went viral last year, I had to start charging people for my time. I never used to charge. I used to do free consultations all the time for free.
Wow. And this is the thing. And I think if people look within, they've got a skill. You're utilizing the skill that you've had to build a business. So we're not even saying do something outside of what you normally do. Just look at the skills that you have.
Same thing.
How can you create? You've got, that's valuable, right? And then you exchange that value for money. And I think that's what people got to look at.
Teaching other accountants, which is the same thing in my business. Just teach it, because of what I do, people come to me and they say, oh, I'm an accountant too. Oh, I want to open up a business like you. How can I do it? Just from teaching people. That's another stream as well that all flows in.
Amazing. So the 2-child benefit cap is being scrapped in April 2026. What does that mean for families? How can they prepare for it?
So that is, I would definitely say, is a good thing. Obviously, it's a good thing on one hand because it means that those families that have 3, 4, 5, however many children, you are going to be able to get some benefits from the government. Obviously, there are other things you need to consider. So they do look at household income. I think the government, they talked about this whole thing about wanting to alleviate child poverty. I'm not a politician, I'm not into policy and all of that, but that's one of the things that they're trying to do. And so by doing that, it means that parents should have more to be able to, I guess, take care of their children. It's not going to make you a millionaire, but it should at least be able to go towards the cost of having children. Now, the other issue, though, that I would say, it's nice on paper. Yes, thank God. If you've got 3 children, 4 children, well, you can still claim something. But in reality, I feel like the damage has been done, because what has happened, and this is going into economics and policy rather than finances, is that because of how expensive it is to raise children, people are having 1 and 2 children, or just 1 child or 2. And what they're finding is that the number of children working right now and the tax coming from those children are not enough for the baby boomers who are now in retirement. And so if you think about the pensions that the government pays to the elderly, which is why they keep on extending the pension, the age for retirement, they keep on extending it, because basically, if you look at it in proportion, let's say there are, I'm making these numbers up, let's say there's 10,000 baby boomers or 10,000 retired people that are having pensions from the government, but there's only 5,000 working people. ideally it should at least be 1-to-1, right? For every pensioner there is that the government is paying, there should be a working person whose taxes or whatever are going towards being able to fund that. But what they're finding is that the ratio is not quite right, and so you've got way more retired people, way more people who are needing pensions, and less population that are actually working to be able to pay for those pensions, for example, in a very simple way. Okay. Obviously, our taxes are used for multiple things, not just pensions, but as an example. Okay.
So you think that in terms of how expensive it is, you think that's kind of put people off
having more? Yeah. Haven't you seen? There's research that's been done. The world as a whole, the population is always growing, right? Yeah. But in certain economies, like the UK, actually the number of children that people have has actually been declining over time. Think about it. I don't know. If you've got aunties and uncles in our parents' generation, they used to have like 5-6 children. Yeah, now, how many of your friends do you know have more than 2 children?
That's fair. No, it's true. And it's because you're right. People are considering that it's expensive and they will put that consideration.
I know a lot of people who are even married and don't want to have any children.
Because it is, And people are putting it off for longer.
Putting it off, that's another thing. So back in the day as well, people used to have children much younger. People are chasing careers. Women are working. So they're not at home just having babies anymore. And so, they're taking longer to have them as well. And this is probably way off topic, but also the number of people who are also struggling with fertility is another issue. Because people are also struggling to have children. So you also see people who are like, oh, because I'm past the age, now they're ready to have children. They can't. Do you know what I mean? So that's also affecting. So there's that's why I say it's beyond just finances and numbers. There's policies. I dare to talk about even things like the food we eat and stuff like that has affected people's health as well. And, conceptions and stuff like that. But again, we go off and digress.
So it's a good thing. It sounds like it's a good thing, but you think it's come a little bit too late.
Way too late. Okay. Way too late. Would you consider having a whole extra child?
That's not what's going to make me have. No, that's not what's going to make me have a child. It'll be if my business is doing better. Exactly. I've got a huge jump in my salary. That's what's going to make me say, okay, I think I'm ready.
It will help for people who already have multiple children and maybe were struggling, and especially if you're in a lower, salary bracket and all of that, especially if you've got parents, maybe one is not working and stuff like that, so the household income is lower. It would definitely help. I'm not disputing that, but it is not going to change people's minds about how expensive it is to raise children in the UK. And I think if anything, and I know that there are other policies, like I say, they've been doing the stuff about extra 30 hours, wraparound care, preschool and after school clubs and stuff like that. But I think if anything, they should really channel the money and the policies into actually just reducing like childcare, like nursery fees and stuff.
Just making that cheaper.
Just making that cheaper. I think people would I think that would be a needle mover, because I speak to customers all the time who are like on borderline like 105, 110k, and they're like, oh, I know that once my salary is over 100k, I can't get free childcare. They are literally willing to throw away the 10k pay rise just so they can have free childcare. So that tells you how much it costs for childcare, do you know what I mean? Or the 30 hours or whatever incentives there are. It tells you how much, like, people are willing to give away thousands of pounds just so that they can hold on to free childcare for their children. So that's what they should be looking into.
Yeah, they need to definitely look at the system and just look at it and be like, that's ridiculous. Because let's be honest, like, why would somebody, and we've spoken about this on the podcast and I'm sure we have, like, why would somebody want to give up £10,000s of pounds to get free childcare? That doesn't make sense. Tells you how expensive it is. Doesn't make any sense, right? So you need to look at this. I don't know. At some point, they need to just deal with it, because otherwise, it's just going to get to a point where it's like it's already ridiculous, if we're being honest. But like, it could get worse if they don't look at this.
A good number of years ago, so I think about 6-7 years ago, one of my cousins actually, she ended up having twins by surprise. And she was a professional working 9 to 5. She was like, when she found out how much it cost to take her children to nursery and all of that, she quit her job. She was like, it is better for me to stay at home and pay, like, look after the twins than for me to send them to school. So she had to take a break, and then when they were eligible for like free like nursery and all of that, then she went back to work.
Okay.
This is a professional.
Wow. Just shows you the state of things. Running a business is tough. Invoices, receipts, tax deadlines, it never ends. I used to spend hours digging through spreadsheets and receipts just to figure out where my money was going until I started using Xero. Xero completely supercharged how I manage my business finances. Before I was constantly second guessing my numbers, now everything's accurate and automatic. Invoices send themselves, payments sync with my bank, and I can see my cash flow in real time, all on a single platform. What I love is how simple it makes everything. Xero takes the stress out of bookkeeping, freeing up the time to focus on growing my business instead of being buried in admin. Xero even makes managing bills easier, showing what's due and when, so I can stay in control and avoid unnecessary late payment fees. And when it comes to tax season, everything's already organized and ready to share with my accountant stress-free. It's honestly like having a digital finance assistant that never sleeps. If you're trying to scale your business or just stay on top of your numbers, this is the software that could actually save you time and sanity. And because I use Xero myself, I got something special for you. As of filming this podcast episode, you can get 90% off Xero for 6 months by visiting xero.com/savvy-wallet or clicking the link in the description and start supercharging your business with Xero. So moving to tax on dividends and rental income. So one of the big headlines that hasn't really sunk in yet is the high tax comment on dividends and savings. A lot of people are confused about the details. Can you set the record straight? Exactly what rates are changing in April 2026?
Yeah, so basically they have increased the tax rates by 2%. So at the moment, if you get a dividend from your company or whatever company you've invested in, the dividend tax rate, you have £500 free that you can earn. But if you take out anything more or you are paid dividends that go above the £500, you have to pay if your total income in the basic tax threshold, that is below 50,270, but your dividends that you take out also is within that, you would have paid, or you pay now, 8.75%. So now that has gone up from 20, or is going up, is going to be 10.75%. Yeah. So they've increased it by 2%. So for example, if you took out £10,000 dividend, it's an extra £200 for every £10,000 that you take out. And that's on the basic rate. If you are a higher rate taxpayer, so i.e. your total earnings are above 50,270 but below 125,000, you would have paid 33.75% on your dividends, and now that is going to go up to 35.75%. So the extra 2% increase on there as well.
2% increase. And so that's happening in 2026. So just to clarify, is dividends that you take out from a company, or dividends that, like, for example, if you're investing in a company, like through like a stocks, stocks, it's actually outside of stocks and shares ISA. If you invest in like a company and you get dividends from them, that those rules apply. Like if it's above 500, then you're getting charged this extra 2%. Yeah.
So don't get me wrong on that. I think that obviously it's not great. It's more money that you have to pay to them. However, and this is what I was saying in one of my videos the other day, is that at the end of the day, it's still lower. So you can't compare 10.75% to if you were a 9-to-5 employee, you had to pay 20% basic rate. So what do I mean by that? If you decided not to invest and not to have your money paid to you via dividend, and you decided to say, I'm going for a pay rise, that extra would have been taxed at 20%, and there's nothing you could do about it. And by the way, that's 20% minus NI. Yeah. So when you look at it like that, it's still a lot lower. And then even on the higher rate, so again, higher rate, most people will be paying 40%. So 35% is still 5% cheaper. It's not as much as it was, but it is still roughly 5% cheaper. So it's still okay. We'll live with it.
Yeah. And this change, just to be clear to people, is not happening until next year, April 2026. So this change is not like with immediate.
Yeah, so they don't, many times with the budget, especially because the financial year is April to April, the changes are always from next year, April, because obviously they also have to update their systems and stuff like that. So for this year, you can still have your 8.75% and your 33.75. I know what your next question is. That's why I'm laughing.
Why? Oh no, I've got a question after. I've got my question after.
So should people take out?
No. Not that's early. No. We're one question away. We're gonna get there, because I know people want to know, like, okay, what do we do? What do we do? But before we move to that, I just wanted to actually just talk about landlords, right? So obviously, as well with landlords, I've also read that there's there's a rule. So if someone, I've got an example here. So if someone has around 12,000 in rental profit, a landlord, how much more tax will they be paying under these new rules?
So they're going to end up paying roughly an additional £240.
Okay.
So that's because before they would have just paid their tax on their property income in line with like the basic and the higher rate tax, which is the 20 and the 40%. But if it's income from property, that's going up to 22% and 42%.
Okay.
And so on £12,000 income, that is an extra £240 a year. So they would have paid 2,400. They're now going to pay 2,640.
Okay. So they're just and I'm just wondering, what's up with these little 2%?
To be fair, it makes, I guess, when you add to an individual, it might not be the end of the world.
Yeah.
But when you add it all up for
together,
the economy, I guess it makes a lot. But to be fair, actually, I'll be honest, right? For landlords, depending on the kind of tenants you have as well, though, £240 can actually really make a difference.
No, you're right. You're right. It could make a difference, especially the buy-to-let era where people are saying it's almost not worth it.
It's almost
adding
already
another
tax. Yeah. And the thing is as well, don't forget landlords, and this is the thing that I hate that the government does, right? But it's not personal, right? They make policies that try to reach a certain group of people, but they don't realize that it affects everybody. So for example, like even when you see big headlines, oh, Amazon is not paying tax, Google's not paying tax, right? You have big, massive companies, and then you put a policy in place that affects Google and Amazon because they're big global brands. But you forget it also affects Mr. Joe Bloggs down the road with his little small business. And so when you think about landlords in the typical sense of, someone who is a seasoned buy-to-let investor, they've got 20 properties, 40 properties, 60 properties. Okay, you can see them as, people to be targeted. But it also affects just the daughter who just inherited her mum's property because her mum passed away and the property now has tenants in it or whatever. And so you find that even just the basic person who is not a seasoned landlord, like the person's still doing a 9 to 5, the person still has other responsibilities. These kinds of laws really do impact them. I guess some people, I'm not going to call them any funny names, maybe haters, will say, oh, well, then they should just sell the property or whatever, if they don't need it. But actually, it's a way of it's also about inheritance, right? A lot of people are attached to certain homes. And I'm talking about like the example of the person who inherits their mum or their dad's property, right? They're not going around buying 5, 10, 20 investment properties. They just have certain things that have been handed over to them. And these laws affect these average Joes who are also on the train, going to work, hustling, doing the 9 to 5, just like everybody else.
Yeah, I think these percentages is like squeezing the up and comers, squeezing the small businesses, rather than the big businesses. They can afford the extra 1 or 2%, but
it puts off everyday people. Yeah, basically.
And I feel like we're gonna, I dare to say, and I have got a question around this. It does feel like that. The small business owners, the landlord who has the 1 or 2 property, it's almost like, don't bother doing that. Basically. Just be an employee. We don't want you doing nothing yet. That's what I'm starting to feel like with all these policies coming in.
You say you're starting to feel. I've been telling you, like that's how the economy is set up. They don't want, like, you go to countries. I just came back from Nigeria literally a couple of days ago. You go to somewhere like Nigeria, right? You have people who are all the way up here and people that are all the way down here. Yeah. I mean, someone who is driving like a 2025 massive brand new car, lives in a mansion, has access to this, like literally money flying out of their ears, can do anything, buy anything, whatever. And then you have the basic person. I was looking at them in the morning, sweeping the streets. And this is in Abuja, right? Abuja is the capital. And I was looking at them, I was asking the driver who was driving us around, I was like, how much do they pay them? And he told me their salary, which is basically like £30 a month, right? So then I said, but where we are is the capital, it's like being in central London, right? How can they afford to live in this area? For them to do this job, it means they live locally, right? So I was like, oh, they must not live here. He was like, oh yeah, no, they do. But what happens is that you find them living like literally almost on the street. Like they have to make makeshift homes to be able to live in the center of town, to be able to do the job of sweeping the streets in the morning, to get the £35 salary for the month. So why am I talking about that? Because the UK is trying to avoid that. They don't want people sleeping on the streets and barely getting by while somebody else has so much money going out there. So this is why they try to like close the sandwich, right? And it's like trying to reach people here so that you can lift these people up. But in the process where you have middle earners who are just trying to be a little bit better. So you're not down there, you're not sleeping on the streets and all of that. You're trying to climb up to be like some of these higher earners and just have a bit more and have that extra disposable income, extra holidays, and, you know, make yourself feel good. They're like, no, we don't want you to be reaching up there. So that's why they bring in these policies to continue like bringing the sandwich closer. Yeah.
It's like, as we think about it, it's like, what society do we want? I think I would rather a society, don't come for me, people. I think I would rather, no, if I'm being honest, I think I would rather slightly that maybe, I don't think I like extreme wealth. And this is what's funny, because, you know, there's a lot of talks here, and I feel like we're going off a tangent. We'll get back to the subject, but I feel like there's a lot of talks here about let's tax the rich, let's tax the rich. Even here in the UK, we get this. But it's like, what do we want? Do we want people to be close together, or we don't
this is want the thing. It? And if it's you like, want to tax the rich, they have to be more specific about these policies. Yeah. So I feel like if you want to tax the rich, they should. So for example, we're going to talk about the mansion tax, right? Or a property that's worth over £2 million. Who are we to say whether 2 million or 3 million or 5 million should be the threshold? But when you're going to put a policy in that's about taxing the rich, you should make sure that it's not affecting the middle earners who are also just trying to be a little bit better, if that makes sense. Yeah, I get what you mean. So the person who does have one extra property that they're renting out and they might want to get another one, like you need to have like, if you've got like 20 properties and above, for example, then we need to do something to try and bring you back down. Or if you've got £1 million sitting in your bank account, you're not using it, you've never gone into it, like that's the kind of person you should be talking to, not the average person who just has a salary of 60k or 70k or 80k. I say average person because I know some people also come for me and say no, 80k is not average.
It's not average. That's not average. That is definitely not average.
But what I mean is, the 80k person's not a millionaire. Yeah. Let's be honest.
It's not a millionaire.
This is probably what we need to do, right? We need to bring people. I think this is like the next level of like social media or whatever. Let's bring someone, right? And there are people who do this on their social media accounts, right? You earn 30k, what's your budget like? You earn 50k, what's your budget like? You earn 80k, you earn 90k, right? And see how these people spend their money. You'll probably find, so that people that are earning 30k can see that even the person who's earning 80k, don't get me wrong, yes, they do have more money than you, but they're not going on like 5-star holidays.
Yeah. Not often.
Because people think that 80k or 100k, and I think I said this before, 100k back in the day was like you being a mini millionaire, right?
It was nice.
It was nice. 100k does not go anywhere in this economy. And so I feel like if we could bring the reality for people to see, like when we start seeing people who are able to afford like a new Louis Vuitton bag and shoe every single month, then we can talk, right? Not people, because even on a 100k salary, people are still shopping in Aldi. Yeah. People are still shopping in Lidl. Whereas the 30k person thinks, if I had 100k, I'll be eating at Waitrose and Marks and Spencer's every day. No, you can't actually afford it.
Yeah. It's tough. It's definitely tough. And I think that I think maybe they definitely just don't want people to even be able to get there, to be able to break out and become the next millionaires. And if you do it, it's going to be very hard. I think maybe they want to tackle both. They want to make it extremely difficult, even if you are a small business owner, you know, you're a landlord with a few properties. They don't want to make it easy there, and they don't also want to make it easy on somebody who is super rich, like you say. So anyway, so we were saying that we're going to talk about, you know, a potential solution. So there's been talk about business owners taking a super dividend before April 2026, basically paying themselves a large dividend now to beat next year's higher tax rate. What's your take on that? And what risks might people be overlooking?
I think that there's absolutely no need for that. It's like when people were buying all the toilet paper at COVID, but just before COVID.
Oh my God, that and soap. It's like, what? You
What
didn't
are
have
you
soap in
doing?
your house or something? What's
What are
going
you
on?
actually doing? It's so excessive. We just talked about some of the numbers, right? It's an extra £200. Taking a super dividend, I don't know. It's not that deep.
Yeah.
On 10K, you're going to pay an extra £200 if you take it out next year. Yeah, you might be able to buy one less handbag or one less pair of shoes. I don't think you need to be doing anything super crazy. I think that if you were going to take out money anyways, and maybe you were planning to do it in April or in June or July, and you were going to do it at some point anyway next year, and it makes sense. And this is why you have to get advice, because it's not just about the dividend. You can be looking at it just to say, oh, for the dividend, I was going to take out 10K and I was going to pay, what's it called? I was going to pay £875 tax. Now they're going to try and make me pay £1,000. But don't forget, it's not just that. How much of your other earnings as well? Do you have a 9 to 5? Do you have landlord income? Do you have other income? So if you go and take out a super dividend now this year, and then that pushes you from being in the basic rate tax bracket into the higher rate tax bracket, you might actually shoot yourself in the foot, because now you've taken out more and you've gone into where you now need to pay 33%, or rather than 8.7%. So you just need to look at it. You do need to run the numbers. Like, what are the numbers saying? And then next year, if you can take it out in a way that you are still basic, okay, yes, you're not going to pay 8.7, you're going to pay 10.7. But if you can still keep yourself within the basic tax bracket, that is better than you trying to take out a super dividend now and then pushing yourself into a higher tax bracket.
Yeah. Okay.
So please don't do the toilet paper thing. Like, sit down, be calm, be collected, do the numbers, work it through with your accountant and see, because they need to look at your picture as a whole. And that's what many people don't realize about the UK tax system. Like, it's easy to pick on, oh, your salary is this, oh, your dividend is this, oh, your savings is this. They look at you as a whole. They look at everything, like your salary plus your business plus your dividends plus your property, if you have that. You're like, everything together. So in every particular year, you need to see what other things have you got going on. Because, for example, if you say to me, next year, actually, I'm quitting my job in April, and from next year onwards, I'm going to be just a business owner, I would say you need to keep the money in so that next year, more of it would go into the basic rate tax bracket, if that makes sense. So don't do anything crazy.
Okay. So how should people be thinking about this, as, business owners, contractors, especially so you mentioned having this holistic picture, speaking, but how should they think about these kind of changes now, especially as this is going to impact them from next year?
I don't think anything, if we were sitting here and we were talking about a whole brand new tax that never existed before, then I think that's where we need to be concerned. But these things like dividend tax, even tax on landlord income, tax on savings, these things have existed. You were always going to pay tax. It's not like they've just brought out a brand new tax. It was zero, and now all of a sudden they're asking you for £1,000. That's not what it is. And so I don't think that you need to explicitly be so worried and concerned. These are small dials, right? Like you said, £200. Like, for an individual who has a whole property and probably has other income, is £200 really going to make you go dead broke? No, it's not. So I don't think you need to be doing anything different to what you were doing before. I think that you do need to run the numbers again and see where it's going to put you. And if you were saving towards your tax bill, if you were saving towards your dividend bill or whatever, obviously you're going to need to up that and, save a little bit more. But again, you should have been doing that anyway. It's not, oh, wow, there's a new tax. I never had to. You were going to pay tax anyway. So it's just adjusting what you should have already been doing.
Yeah, okay. I understand. So over 70% of people who watch these episodes are subscribed. If that's you, hit the subscribe button. It really supports the channel. It helps it grow. And most importantly, lets us keep bringing you valuable conversations like this one. Plus, you'll be the first one to know when new episodes drop. Thank you so much for your support so far, and enjoy the rest of the show. I mean, overall, from your perspective, looking at this budget, does it concern you, or are you just thinking, oh, you're just doing...
I am concerned. Okay. Because there's multiple little things that will have a bigger effect. Because let's be honest, again, if you look at it just on the dividends, it's just 2%. But do you know what? If you're someone who's got dividends and you've got property and you've got savings, it's 222. As someone, and maybe there are people out there like me who has a bit of on an individual basis, as you probably can tell, because I talk about multiple streams of income, I've definitely got income that's going to be touched by all of this. I definitely think that I don't want to say worried, because my nature is not to be worried. My nature personally now is to adjust. But it does, when I read the headlines, I was definitely like, Benedicta, we need to start thinking about where we're going, because we can't be here forever. Like this is not, if we continue like this in 10 years time, imagine we've done this for 4 budgets now.
Yeah.
Imagine in the next 10 budgets, what are we going to be sitting here talking about?
That's true.
And if we compare in 10 budgets time to like when we first started talking about budget, you will see that every year it's a little bit. But as a whole, it's a really steep decline. And I definitely think that all of these things combined make the UK more and more of a less attractive place to make money, to try and grow your money. And I think that people definitely should look outside of the UK. I will always still be the first person to say that the UK is a very stable economy, that the pound is strong, and it's good to have pounds in your pocket when you go abroad. Even with, just going to America, your pounds will go a lot further. So I do think you should invest here. But in terms of making your bed and staying here forever and ever and ever and putting your whole egg or all your eggs in this basket of the UK, I think that people should look to diversify. Yeah. On a personal note, I just think, like I say, I just feel like every year it's another sad thing. It's another decreasing. It's another taking away of allowances, or it's another increasing on the tax. And so by the end, what will we have left? We'll have crumbs left. Basically.
So, now that you said it that like that holistically, there might be some watchers and listeners that will be feeling this. For those people, how should they think about this? How should they try to navigate those changes?
And this is what I was saying about multiple streams of income, but inside wrappers. So for example, like the limited company, I think that you have to, you don't have a choice but to increase your income, but not in the typical way, not in the just the savings and investing way. I think that you need to also pool resources in the sense of not just looking at yourself as an individual, but especially if you've got a partner, husband and wife, even if it's not husband and wife, you're living with people, right? As a single person, and obviously each to their own, who am I, right? But as a single person, I would not be personally living in a house, paying a mortgage by myself. Like, there needs to be a lodger or somebody in there. There needs to be like, I can't be paying all these bills by myself. Fair. Even if I can afford it on paper, because I want to increase my disposable income. So things like pulling resources together, even like with cars and stuff. I know some people like the wife has a car, the husband, why? You need to make it work with one car. Like you need to, for me, these are like practical tips, right? Because back in the day, it might have been easy and cheap and affordable to be able to live like that. But with the way things are going now, I think that we need to start being more savvier with what we've got, basically. So the wrappers in terms of limited company and being able to use that to pay for valid expenses, but also the pooling of resources. There's something they call house hacking, right? Where I know one of my friends, she has a 4-bedroom house. She turned her garage into like a self-contained like studio, shower, blah, blah, blah. So she can do Airbnb with that, for example. You can't just be living in a 4-bedroom house on your own. Doing what? Paying all those bills by yourself. So
it's very ingenious though.
Come on,
you have to be sometimes.
When I was before I got married, and before anyone shoot, because you're married, that's why you can say that. No, even before I got married, I used to do Airbnb in my spare room. When I could, me and my friends used to live together. Like just because it just gives you that extra disposable income, and so things are not tight, choked up to here. Yeah. You can't breathe.
Yeah. Talking about choked up, right? Savers, my savers that are listening are probably feeling choked up as well because they've been getting it too. So as my understanding is that, savings tax is going to be rising to 22%, so up 2% in, they've got an extra year. So it'll be in April 2027. but also we also got the frozen thresholds that we talked about, right?
Yeah.
So what does this double whammy mean for anyone keeping their money in a normal savings account outside of a cash ISA?
For people who are avid savers, which is a good thing, by the way, if you are a basic rate taxpayer, you can earn up to £1,000 in interest without having to pay any tax. And if you are a higher rate taxpayer, you can earn up to £500. So that's your savings allowance, basically. £1,000 and £500 are the savings allowances. So before, any money that you would earn, I say before, still now, before until they put the changes in, any money you earn above the thresholds, the 500 and the 1,000, you would just pay at your normal basic or higher rate. So if you're a basic rate taxpayer earning below 50,270, you would pay 20% on that, 20% tax on that savings interest that is above the threshold. And if you're a higher rate taxpayer, i.e. earning above 50,270, you would pay 40% on any interest that you make above the £500 allowance. So now they've increased that by 2% as well. So you're going to pay 22% and 24%. So I'm not happy about it, but I'm not surprised, because remember last year they increased the capital gains tax as well. Right. And so for me, it's a similar thing, but last year they focused on capital gains. Now they're focusing on savings. I personally think it's a crime for you to tax somebody on their savings in the first place, right? Because at the end of the day, this person worked for the money, you tax the money at source, and then I've decided from my good behavior to say, do you know what? Okay, no problem. You took your tax. I'm going to save a little bit. And my money is growing and making interest, and you still want to take from that. Do you get what I mean?
Yeah.
Like, I don't think it's right, but who am I? I'm just an accountant. So yeah, I don't think it's right. It's not nice. The extra 2%, again, it just goes back to what we were saying. It's another 2% in addition to your dividends, in addition to capital gains, in addition to every other thing that's you've got going on. What should people be doing? I think that you absolutely, if you were not using the ISA, because maybe this is what, I don't know, they must have statistics. Maybe people are not using the ISA wrapper as much as we think, even though people like us always talk about it. If you were not using the ISA wrapper, you need to go and use it, basically. Yeah. Because with the ISA, no matter how much your profits, your investments make or your savings make, there's no tax. £20,000 tax-free every single year. And I know obviously there's been changes in that. We'll talk about that shortly, but you have to use it. Don't just be putting your money in a normal savings account.
Yeah, there definitely seems like there's signaling for people to use ISAs more.
Yeah.
I don't want to say cash ISAs because we're going to talk a little bit about it, but it seems like there's signaling. That's maybe on the surface, but the cynic in me would be like, it seems like this is just another way for them to get tax from people.
Absolutely.
Where they know that there are people that are, maybe already paying a certain amount or, of tax and interest, and then they're paying more. I'm not saying maybe people are doing that, because at the end of the day, right, we all know that the reason cash ISA and all this stuff, that's also an education thing, right?
Yeah.
A lot of people are not aware of it, or actually maybe people have maxed it out. There are people that might have maxed out their ISAs,
but again, they should come for those people, not the people who are trying to come
for those
up.
people, and people that don't know better.
Personally,
right?
I don't think you should be coming for anyone anyway.
Yeah, you should be coming for anybody's savings. If we're being very honest, the savings is the weird one for me. Like you said, that is a weird one. And the other thing I was going to say is, this is making the system, or the UK tax system, more confusing. Because now we got these random, like 42,
number
22,
here, number there.
then it's 20, then it's 40. It's like on certain criteria. It's like, guys, you just made this even more complicated.
And the UK system is already one of the most complicated tax systems in the world already.
Yeah, so it's not helpful, because it's already complicated for people to know what's happening. And now you've added another complication for people. And it's like,
I feel like the UK tax system at the moment is like a patchwork quilt. Like over the years, they've just done a little bit here, a little bit here, a little bit here, and then it's just made this kind of gobbledygook kind of system going on. They could potentially, if they really wanted to do something reformational, they could actually just start from scratch and be like, you know what? Let's have 1, 2, 3 policies, right? You either fall into here, here, or here. And this is how it is. Like you say, it's just to make it simpler because it is confusing for people. Thankfully, for accountants like us, we have accounting software where all of these numbers and changes are basically built in to the software. So it helps us to like pre-calculate some of these. But yeah, you're right. It is very complicated.
Yeah.
And this is where I guess it gives people like us jobs, right? Because then you need to speak to an accountant to tell you what it's going to be, right?
Yeah, because it is confusing. And as we were talking about it, I was like, wait, savings interest is going to be in 2 years' time. It's going to be 22%. But then my basic tax rate is 20%. Like, come on, guys. Why are we confusing something that doesn't need to be confusing? And this is another thing,
which is what I was trying to say to you, that I think they really just wanted to increase they wanted to increase the income tax rate, but they're not brave enough to do it, and so that's why they're doing it to everything else. And do you know what it is? They're being indirect, and I feel like because they've pulled this 2% stunt, right, on savings, dividends, blah blah blah. Do not be surprised. In fact, you can quote me. Within the next couple of years, I bet they're going to change the basic rate to 22%.
Oh, let's get in a line. We're going to get in a line. That's what happened. We know this game because we work in the corporate world. This is what they do.
So then they'll now bring it up from 20 to 22%. I would not be surprised. So then it will now be 22 and 42, and then they'll say, "Oh yeah, it's simpler."
Yeah, it's simpler.
Why didn't you do it simpler backwards?
Exactly. We simplify it. We simplify the tax system. There you go. It's level. God. Honestly, no, it's crazy. But yeah, so you mentioned ISAs, and I think that ISAs, if you're not utilizing your ISAs, use it. I have got an episode that hasn't come out yet that I did mention, and it should have come out. And I was just saying in that episode that I said, if you see the trend of where this is, you just never know if this. I don't think personally that they'll get rid of it, but utilize it as much as you can while it's here. Do you not want to give these people... the trend is telling me that these people, they're already messing around with it. They've already messed around. Something that has not been messed around for years. It's just been going up. Now they've messed around. I'm like, okay.
And if you want to go back to what we were talking about, right, in terms of the thresholds of and inflation, technically, don't you think that ISA allowance should have gone up as well?
It should have
been, right? Because if 12,570, 5270 and all of that for income tax thresholds, brackets should have increased. The ISA allowance should have increased from 20% to 25, 30, I don't know. But they haven't increased it. Now they're messing around with it again. Do not be surprised in a couple of years if they say now you can only keep 10,000.
Yeah.
Now you can only keep 5,000. Because that's what they did even with dividends, right? Where you could, you could take
they reduced it.
They reduced it over time. So right now, if you have the money and you can maximize your £20,000 per financial year, please do it. Please do it, because I don't think it's going to be around forever.
Yeah, there's something that's bothering me about it. That's making me feel like, these people, I don't know, man. Like,
I feel like this particular budget, right?
Yeah,
they just wanted to touch everything a little bit, and see how people react. And then, depending on people's reaction, will give them the boldness and the braveness to do more bigger things next time.
Yeah. So as I mentioned, from April 2027, so we got a few years, the cash ISA limit for under 65s drops to £12,000. What does that mean for people who prefer keeping their money in cash, and how should they be thinking, about that change?
I don't, thankfully, like we already said, the whole 20k is still available, but what they're saying is that the cash should not be more than £12,000 per year. If I'm honest, I'm indifferent, because for me as a finance person, I think you should be investing your money anyway, not just saving it. And I'm going to say something a little bit controversial in a minute, but I think that it's not the end of the world. I think that do what they said. Don't save more than 12,000 in cash. Otherwise, you will pay tax. But the other 8,000, they're encouraging you to put it in the stock market, stocks and shares and all of that. Especially for under 65s, the whole idea of the stock market is that you want to be using it over a long period of time anyways, and that over time you do tend to get your return. So I don't think it's a bad thing. I think it's good, but I think that they should also have the right financial education to go with it. Like let's be honest, right? Most of the things we talk about here, and you've probably talked about with other guests, we were never taught at school. I didn't know what an ISA was at school.
Any of this stuff.
I didn't know what the tax rate was, even basic rate or whatever. So I think that they should have a proper financial education system alongside so that people can make the best use of this. Obviously, that is a whole nother policy and a whole nother thing. But I think in terms of diversification, things that you should look into is probably things like gold. So gold, my husband and I, we recently invested, I say recently, it's actually at the beginning of this year, started investing in gold. And with gold, depending on how you invest, it's actually tax-free. And so you might want to start holding your cash in gold and other similar assets rather than literally liquid money, basically. And so, things like other sources of other ways of holding your money, I think people should start looking into that.
Yeah. I think it's important. And as we mentioned, I think ISAs are a good thing to look into. I've spoke many times about, investing in stocks and shares, ISA. And I believe that the UK government is wanting to encourage more people to invest. But like you say, they need to do that in a way that supports that education. Otherwise, people invest, and if they lose money, they're gonna run away from it.
They're gonna go crazy.
Do you know what I mean? It's not enough just to try and force people to do that. I think this cash ISA thing, really and truly, I know you say you're indifferent. I think really it doesn't really impact the people who was already investing in stocks and shares ISA, because they were just probably gonna max it that way anyway. Mostly that way. So I don't understand the play there. I'm not really understanding it. But I think for that person who hasn't got an ISA, I think this is a signal to start thinking about it for yourself. So another big thing that happened was the salary sacrifice. So this is coming in 2029. So there's going to be a new cap on salary sacrifice. For anyone who doesn't really know what salary sacrifice is, can you explain how it works today, why it saves tax, and what's changing in 2029? Yes.
Now, I might have been indifferent on the cash ISA. You see this pensions one, I'm offended. I am not indifferent on this one. I think, what the nerve, what the cheek, what the, like, how dare you? How absolutely dare you? Like, so basically the way the salary sacrifice works is, let's say you have a gross salary of, let's just say 80K, for example, and you decide that I want to, obviously, you're signed up to your company pension scheme in the UK anyway. It's like a legal requirement for every employer to have you signed up. I believe is a minimum of like 3% or something like that, 3 or 3.5%. So most people are saving towards, retirement, right? Which is a good thing. Obviously, you don't want to be stranded when you're not working. What some people do is they actually pay extra. So it's like savings as well, right? They pay extra into their pensions. They sacrifice their salary today. My salary is 80K. The basic pension, let's say you're taking about 7K, for example, from my salary every year. And so after tax and everything as well, I'm actually getting into my bank, let's say maybe 55K, right? I have then said, you know what? I want to be even better with my money. I want to think about my future. I want to invest for when I'm old and not able to work. And so I'm going to even sacrifice more from my 80K salary. I'm going to put another 5K into pensions. And before, what would happen is, because that 5K is taken at the gross level, the 80K level, you would not have to pay tax or NI contributions on that, right? So they would say 80K minus your normal pension, let's say 7K, you add in another 5K, so let's say 13K. So now you've got 67K. You would then pay income tax and NI on the remaining 67K. What they're trying to say now is going to happen from 2029, is it? Yeah. Is that you can have your gross salary of 80K. You can put in the employer pension, that's fine. But if you decide to say, I want to put extra in, you can only put in extra of 2K that would allow you to save on NI contributions. But if you put in any more, you can still put it into your pensions, but they're going to still tax you and you're going to still pay that NI contribution. So your 80K would be your salary. Take away your gross, your general pension contribution that you would have put in. Mm-hmm. Let's say, like I said, 7K. Then you say you want to put in an extra 5K. So they'll say 80K minus a 7K. You want to put in 5K. We can only cover you for NI contributions of 2K. So that goes up to like 9K. So you've got, 71K. So 71K, you're going to pay NI tax on that, as opposed to before where you'd have paid your NI tax on 67K, sorry. Yeah. So you're going to have to pay NI tax on money that you never saw, money that never went to your bank account, money that you were sacrificing for your future. And by the way, maybe people do or do not know, you still do get taxed on your pensions in the future.
That's true. Yeah.
When you withdraw from your pensions in the future, you get taxed. So it's just like tax all over the place. And I just think that it's so unfair to penalize people, because most of the challenges that they have is that, people don't think about their future. People don't invest for their future, which is why they try to encourage people to do pensions and all that. Okay, now people are being sensible, thinking about it, doing the needful, and you're still taxing. Like,
that's crazy.
It's just wicked. It's evil.
So what can people then do about this? Is there an alternative to this in a salary sacrifice situation? Because obviously many of us...
So I wouldn't say there's an alternative to getting around it. The policy is a policy, but you see before as well where I said, if you're going to pay dividends anyway, just pay it. Don't do the COVID thing. For this one, you need to do the COVID thing.
Really?
So So because what they're saying is that you're going to have to pay tax on anything above the 2K. They're only allowing you basically to salary sacrifice 2K. I would say you want to maximize if you can afford it and you want to, because you can put in up to £60,000 a year into your pensions. If you can afford it, you want to be maximizing those allowances. Actually, you can there's something where call it like a 3-year rolling. So if you don't use 60K this year, you can roll it forward. Next year, you can put 120K, and you can do that for up to 3 years, which allows you to potentially put in up to 180K at one go if you have not used any of your allowances. Obviously, if you have put some money into your pension before sacrificed before, then you need to take away whatever you put in, but up to a maximum of 180K for a 3-year period. I would say you want to be milking that and maximizing that, because then you will save on the NI contributions. And then after that, I just think that there's no incentive to then use pensions anymore to salary sacrifice.
Okay.
Although there may be some groups of people, like I talked to you about the people who have access to free childcare, and they salary sacrifice because they want to still have the access to childcare. Apart from that, I'm not really sure why else you want to be putting money into your pension.
Really? So
beyond the normal that you would put in anyway.
Like beyond like setting up an employer pension.
Yeah, beyond a standard employer pension. Yeah.
Wow. Okay, so talk me through this, right? So I understand it from the employer's point of view, like you're working for a company, you can do that. But if it's your own setting up for yourself as a business owner, let's say we've got a business owner or even a contractor listening to this, right? Are they able to set up their own employer pension? Okay, and then it will do the normal...
Yeah. Okay. So, thank you for bringing that in. So everything I've just said now is for like the normal 9 to 5 employee. You work for an external company, you get pay slips. Now, for business owners, I would say that you can still contribute to number one, you can set up your own private pension. It's called a SIP, a self-invested personal pension. So you can set that up, and you should be setting that up as a business owner, especially because money that you put into your pension is a valid business expense. Now, in terms of the NI changes that they're doing, it does mean that your business would still end up having to pay, I believe, those NI taxes.
Okay.
Because before you could it was at the gross level. So once you put the money in, they don't worry about there's no tax calculation. But now what they're saying is after 2K, there's a tax calculation.
Right,
so it means that your business would end up paying the NI amount.
So they are really going after pensions then?
Because I think that they've realised with all the other policies that they put in for the last couple of years, the pensions have been the pension scheme and all of that have been the thing that people have been using to at least adjust things. Yeah, they are actually going after pensions.
This is mad. Okay, so we've got the mansion tax as well. So there's a new high value council tax surcharge, the mansion tax, coming in from 2028 for homes over £2 million. Can you break down how it works and what knock-on effects it could have even for people who don't own a £2 million property?
Yeah. So with the mansion tax, it's very easy again on paper to say, oh yeah, you've got a big house, £2 million, you need to pay extra. But don't forget, especially because of inflation, you think about places like in London that it might not, it's called a mansion. It's not really a mansion. It's just that it happens to be in an environment that has really increased, right, in value over time. Now, I'm sure there may not, it doesn't apply. The average person does not live in a house that is worth more than £2 million, let's be honest. But if I'm honest, on a personal note, I'm not too concerned. But what I am concerned about is not necessarily the explicit tax of, if your house is worth 2 million, you need to pay an extra £2,000 or whatever per year. Because I'd like to think if you're living in a £2 million house, you're probably spending a lot to maintain it anyway, and probably can afford life at that level. Yeah. However, what I am concerned about is that this sets a precedent for future taxes on lower value houses. Now, £2 million seems quite high. £1 million, however, you can easily get a normal family home in certain areas that it's not affluent, it's not whatever. There are flats in central London that probably are worth £1 million, right? Yeah. So this is not someone living on a big old farm with like hectares and acres of land. These, once you set a precedent that, at the £2 million level, we tax people, it gives room for next year, if your house is more than £1 million, you need to pay. Then you now start thinking about £500,000, which most properties, particularly down south in the UK, are probably over £500,000. Yeah. And so what it is now it's a tax against home ownership. That's what I see. Yeah. Because obviously as a tenant, you wouldn't need to pay that. But the homeowner needs to pay that. And so I'm concerned, not right now, but I'm concerned about the future and what this potentially opens up.
It is concerning because we already have a bit of a property crisis and, a bit of affordability. And if you're going to, add a tax to it, what's the implication
for that? And it's an annual tax, it's not even a one-off. Yeah. We already complain about stamp duty tax, Council which is one-off. Council taxes every month. And then you now want to bring in why? And the other... it's reckless. Yeah. It's really horrible.
Yeah.
I just feel like the whole UK system, basically, it really just, it penalises people for ownership. It penalises people.
I think it goes back to what we were saying.
For having any kind of asset, trying to grow anything. I know they're going to say this is taxed at the wealthy, the super wealthy, people whose parents handed down wealth. But if my parent or grandparent or great-grandparent did the needful, because they didn't, you don't just get a £2 million house by doing nothing. If they did the needful, they gritted and they grinded. I'm gritting and grinding now, and I want to give my children my grit and my grind.
Yeah.
I don't think you have a right. I feel like it's becoming, there's something they call about like a nanny state, right? Where they watch everything you do, monitor everything you do. I feel like it's even worse than that. Like, you are literally invading my family privacy. You basically don't, like my grandparents' sweat and tears, you don't want me to benefit from it.
No. We need to get a piece
literally,
of it. Literally,
it's so horrible. And like I say, the unfortunate thing though is that it really, apart from the people who will just get up and leave, it really makes it really demoralizes people who are willing.
The motivation to want to work harder.
There is no motivation. And so you find people just whatever they say.
Why would I go to that threshold?
Let me just go to the job. I'll just get my average salary. At least let me afford bread to eat and food to, drink, water to drink. And there's no incentive. It doesn't encourage entrepreneurship. Doesn't encourage thinking outside of the box. Doesn't make people want to get more. Like when you go to America, you talked about America. In America, the money in the economy flows a lot better. Yeah. Don't get me wrong, they work bloody hard as well.
They work a lot,
But the money flows. Like, people are excited. Like, people think like, we can do this, we can do that, we can make this, we can make that. There's an excitement, there's a buzz. In the UK, it is damp, sad, and dreary. Like, no one is excited about anything.
Oh my God. So, in your view though, I feel like, as I mentioned, I feel like the government's going after everyone now, employees, business owners, savers, investors. In your view, which route is still the most tax efficient way to earn or grow money in the UK right now?
So there's not one route. It's a case of making use of everything. So we talked about the ISAs. That applies to everybody, whether you're a business owner or an employee, making use of that. If you haven't got a business, you should be having a limited company. Whatever you want to do with that limited company, you can think about it. But yes, maximizing the fact that as a business owner, you can have certain business expenses. You can basically route your money through a limited company. I would highly advise. Like I say, I don't think there's one way. I would definitely incentivize or encourage people to have multiple streams. If you're just relying on the one income stream, it's going to be hard for you. Collaborations and partnerships, which we talked about already. But yeah, I don't think there's one way. I think you just need to look at all of the different policies and make sure you can actually like have income in different ways, basically.
Yeah.
So from the savings and the investments, from the ISAs, from the business, from the salary, from the employee. Like I would never be someone to say, oh, quit your job and don't do 9 to 5. No, I wouldn't say that. I would say maximize what you can get from a 9 to 5. Maximize what you can get from being a business owner. Maximize what you can also get from being a property owner, right? All of those different things, like have your hand in all of those pots, because I feel like that's the only way to survive, that you can survive in these times.
And before April 2026, what should people be doing with, you know, everything that we talked? Yeah, so dividends, savings and tax planning.
So dividends, you want to speak to your accountant and just work out so they can look at your overall position, if it will make sense to take out a bit more money this year as opposed to next year. And then definitely for the pensions, if there is money that you can sacrifice now to maximize your 60k limit, annual limit, or your 180k for the last 3 years, if you can do that to maximize that, absolutely you want to be doing that ASAP. And then I think that generally just looking at these new rates that are going to apply from next year and adjusting your numbers. Ideally you should have been planning and budgeting for how much you need to pay in tax anyway, so just adjusting those numbers if you've got spreadsheets and templates or whatever that you're using, just making sure that these reflect the new percentages that will be required next year.
Yeah. And I think that's very, very, very important. I think, like you say, sit down with an accountant. You've now listened to this episode. I think you've got enough time to make action. You can plan for next year. You can plan for 2027. You can plan for 2028. I think it's important to have this long-term planning. So I did promise, you know, people that they could ask questions. I've got 3 questions here. The first question, and we talked about this offline. So the first question was, shall we all move to Dubai?
I don't think you should all move to Dubai. I think some people should, if it will work for them. It's personal choice. Who am I to tell you what to do? Dubai is great, and don't get me wrong. Yes, there's the tax-free element, but there are other things that you need to think about. Being able to get a good job, cost of living is very high in Dubai. So as much as there's money, it is very expensive. But also, don't forget, everyone is also moving to Dubai, not just from the UK. From all over the world, from Africa, from Europe, from Canada, from America. And so actually Dubai is very congested. And a lot of people are actually complaining as well, even about simple things like traffic, right? That traffic is like a lot more on the increase and stuff like that. So Dubai is not the solution. I think what the solution is really understanding whatever economy you find yourself in, potentially even understanding other economies and seeing actually for what I'm doing for my job set. So I'll give an example. My cousin is a doctor and he married a doctor. So there's 2 doctors. And they moved to Canada a couple of years ago. From the sounds of it, obviously I'm not in their life, but at least on paper, they are getting paid more and the lifestyle is better for them in Canada. Now, there are other things to think about. Someone like me, I hate the cold, so you would never find me in Canada. But, you know, for my profession, I use that as an example because for them as doctors, they found that what they were doing here, they could do there and get paid more, have a better lifestyle, bigger house and all of that. And they were not struggling here, but they just found it could be better. So I would say you need to assess your personal skill set. What do you do? How do you make money? Are you a business person or are you a 9 to 5 person? And for your profession, where can you get paid the most to do it? And so that's what you should be looking at, not just following everybody to Dubai, because Dubai is good for business owners, for example. It might not be the best for employees. So you need to find out what economy, what environment. I know people who have moved to Europe, for example, Portugal, Spain, as opposed to moving to Dubai. So find out what economy will work best for your skill set and the kind of person that you are, and also your family, right? Yeah. If you're married, if you've got kids, you don't want to be taking your kids to somewhere that's not going to work for them. or somewhere where you are enjoying free childcare, and now you have to pay for international schools and international fees, which is what a lot of people are doing in Dubai. So don't just jump on the bandwagon. Do your research, but do your research not generically. Do it specifically for you and what you're doing, your skill set. And then if you need to move, absolutely move.
Yeah.
Absolutely move. But I always say, if you are going to move, you should make sure you put roots down wherever you go. So if you're in the UK and you can buy a property, make sure you have a property before you leave. Don't just be here as a tenant and then go somewhere else and then be a tenant again and then go somewhere else and be like, have assets. If you can have assets all over the world, like there's something called like being a global citizen, right? Where you have assets in this country, that country, that country, because at the end of the day, you never know when you might need to draw on one of them. So that's what I would say.
Okay. No, I appreciate it. And I think it's important for people to realize what it is for themselves, especially. I think that's important. The second question I had was, will pensions be taxed? So I think pension is pot itself going to be taxed.
Pensions have always been taxed, right? The only thing is, or the good thing is just
as
that...
in their tax on withdrawal, sorry.
Yeah, their pensions have always been taxed on withdrawal. That's not a new thing. Yeah. There is an amount that you can take out tax-free. So let's say you've been investing in your pension all these years. Now it's time for retirement. I believe there's like a 25% amount that you can draw that is tax-free initially, but then the rest of that will be taxed at the prevailing rates of that time. The only reason why people are still encouraged, though, to invest in their pensions is because obviously over a long period of time, that's a large pot of money you're putting in, your employer's putting in, the investment and the growth potential is massive, basically. But yes, pensions have always been taxed on withdrawal. And so, yeah, that will continue. Right? Yeah.
Okay. And then the third and final subscriber question was, this is interesting. What have other countries successfully done to bring children out of poverty? Listening to Labour since the budget, that seems to be their justification for raising taxes and abolishing the 2-child benefit cap. But personally, I'm not sure I'm convinced.
I'm not convinced either. Sorry. I just gotta be honest. I ain't convinced. Like, don't get me wrong, it's a step in the right direction, but like we just talked about before, it's not going to cover the full cost of raising a child. Now, obviously, it will contribute, and we thank God for that. It is a good step in the right direction. I can't tell you what other countries have done. Unfortunately, I'm not a global policy professional in childcare. So yeah, I can't talk to that. But in terms of a step in the right direction, yes. But I don't think that we can entirely say that all policies that they have put in are all entirely just to help take children out of poverty. Because if that was the case, you wouldn't be trying to tax the parents that are looking after the children because they need the money to look after the children as opposed to giving you the tax. So yeah, I'm not convinced either on that. But yes, like I said before, the child benefit lifting or the cap release is a good thing for people that have more children. But like I say, how many people are really even trying to have more than 2-3 children anyway?
Yeah. And it's
a little too late in my opinion.
Yeah, that's reality. You know what? I might have to do an episode on that, because that was a very interesting question, just to think about it and, you know,
do some research on the other countries, actually. Yeah,
because I mean, at the end of the day, policies, people, like we say, people have different reasons for why they do it.
Yeah.
And, you know, I think it's one to figure out. So this has been a great conversation. Thank you again for just, you know, featuring on the podcast again for the 4th time and just really breaking down this budget in a way that I think is really relatable to people, practical, really helps them to think about this. And I think also really grounds them. I think it's so important for us to have these conversations. You know, before I did this, I was never really following any of the tax stuff.
Oh,
so
really?
yeah, not really. No, not until I started doing this 5 years ago. And I think that is a very important thing that we need to be doing every year.
Absolutely.
Just because we need to just like get to a point where we reflect and say, okay, is this actually working for us? Let's pivot.
Yeah.
I think it's important. You know?
Absolutely. I definitely would say that, like, in the last couple of years, even with me myself, I definitely would just generally find out about things, but I'm even more so like, when's the budget coming out? What have they said? What have they not said? And I think that we shouldn't leave it to the finance professionals. I think we all owe ourselves a duty of care and responsibility to know what's going on, because ultimately it is going to affect us all. So yeah, absolutely.
Thank you so much. Really appreciate you. Like I said,
for having me.
Do you have any final words for the watchers and listeners?
Take your financial future into your own hands. Don't be passive about it. Be active, be proactive. You're already watching this kind of episode, like, do the needful, speak to who you need to speak to, and do the needful so that you are not a victim. Like, proactively make decisions about your finances, basically, is what I would say. Don't let things happen to you. You happen to them.
Amazing. Thank you so much, like I said, featuring on this podcast. Thank you for tuning in into this week's episode. See you next week's episode. If you enjoyed this episode, share your favorite part in the comments, tap the like button and subscribe to the channel. Your support is really appreciated. We'll keep working hard to bring you more valuable conversations.